everyone, my name is Joy Maleti and welcome to Money Matters. Money Matters is an interactive show that aims to educate our viewers on their consumer rights and provide advice on money-related matters. Do you perhaps have a money-related matter or problem that you would like advice on? Well, do contact us and we may be able to get you some expert advice. Well, lined up on today's show is a powerful discussion on taxes. They say two things are certain: taxes and death. So we'll be talking a lot more on taxes and just trying to unpack what are taxes and why is it important for me to file my tax returns. Right now, we are joined by Mr. Churchill Masindi, who will help us unpack a little bit more on this topic. But before then, we are keen on hearing your views and comments, so please do engage us on Facebook and Twitter using the hashtag #MM_on_SID, and don't forget to tag us at the SID Media. Welcome to the show, Mr. Churchill, and it's such a pleasure to have you with us.
Thank you very much. Thank you for having me here to discuss this important issue of tax.
It's quite an important issue of tax, one that is inevitable. You can't avoid it, they say. But before we get there, maybe can we perhaps, just for the sake of our viewers, explain what the purposes are? Why do we have to pay tax?
I think that's a very fundamental question that you are raising. It's a phenomenon across the world. Governments raise money in order to provide services to their citizens and the community at large. So tax system has been there from the time of Jesus. Taxes were paid. In actual fact, in some of his disciples were tax collectors.
Yeah.
So it's the source of income for governments across the world. They build hospitals, roads, child grants in South African context. So basically that's what taxes are meant to be.
That's what taxes are. And are church organizations in particular exempted from taxes?
That's correct. That is in South African context. All non-profit making organizations, NPOs, are exempt from paying taxes, but the exemption is not automatic.
Okay.
So once you register as an NPO or as an NGO, you then go and apply for that exemption at SARS. It's a very stringent process. It's not a blanket approach that SARS will give anybody that exemption status. Only those who qualify will be granted. So currently you'll find people who want to give back to the community as part of their social responsibilities. They will form Churchill Masindi Foundation to develop people in the rural areas, other young accountants who will want to be like me one day. So we use that fund for that. So the purpose of that would be strictly for giving back to the community. So I don't need to pay tax on such an initiative that I'm taking. I'm giving back to the community, because basically what I'm doing, I'm partnering with this government to develop other young people. So they are exempt, yes, that is true. There's a division at SARS that currently deals with exemption of organizations, yes, NPOs, yes.
But the employees aren't exempt.
No, they're not. The only employees who are exempt from paying are under what is called the Geneva Convention. It's all countries came together and signed what is called the Geneva Convention, which basically means that you'll find that the ambassador and the high commissioner of Zimbabwe is in South Africa. Yeah. So when they are here, employees from that country are exempt from paying tax here.
Yeah, because they're paying tax in
their home country. They are paying tax in their home countries, yes.
Yeah.
So they're also what is called in international tax, what we call DTAs. DTAs is double taxation treaties.
Yes.
So countries will sign at a very high level, at a ministerial level, double taxation treaties with each other, and then that treaty will define the relations between these two countries insofar as taxes are concerned. So those are the only employees. But I need to emphasize this.
You need to apply.
Employees that are working for foreign missions in South Africa are eligible for paying tax in South Africa. Yeah. But
resident.
Employees who are working for the foreign mission, but who are not tax residents in South Africa, they pay in their mother countries.
Yes. So it's in the country where you are resident.
You are resident,
where you are obligated to pay taxes.
That's correct.
So your responsibility is to your country.
To your country, yes. So the tax system of South Africa is designed in such a way that it's a residence-based tax.
Yes.
And your source of income. So if the source of income, that is the first test. Where does your income come from? Does it come from South African resources? If it's yes, where are you a resident? Are you a resident in South Africa or in your mother country? So, and we need to be very clear on this. Residence may not necessarily mean you've got a green ID South African book. Yeah. So you can keep your citizenship of whichever country. But if you are here for more than 6 months, 181 days continuously, you qualify as a tax resident in South Africa. Yeah, so you pay your taxes here.
I mean, you've been utilizing the South African roads.
The South African roads.
So it actually makes
employer,
sense, right?
Yes,
it makes sense that after 6 months of continuous, I think that's the highlight is unbroken period of 6 months, which is 180 days, you've said, unbroken 180 days, then you would essentially be obligated to pay taxes in South Africa.
So you may not, in terms of home affairs, you may not be a resident in South Africa, but in terms of taxes, you're a South African.
You are regarded as. And is there a minimum requirement for me to actually register as a taxpayer?
As a taxpayer, you can be a taxpayer as a business person. You can be a taxpayer as an individual. So there is what we call PIT, which is personal income tax, which is what me and you who were naturally born will pay. And then there is corporate income tax, which is CIT. So those will be legal entities, your PTYs, LTDs, CCs, although they are no longer there at CIPC. Trusts, NGOs that we spoke about earlier on, all those are taxpayers as an umbrella term. But now it depends on, so immediately when you register as a corporate, as a corporate entity, you need to register for your taxes. You get your tax number, you're allocated. And then for individuals, once you start earning income, irrespective of how much it is, you need to register as a taxpayer.
Okay.
The difference now is on filing your tax returns annually at SARS.
Okay, hold that one. I think we'll unpack it a bit further when we actually go to that point of the filing of the tax returns. But I think what you've highlighted and what's quite important, which I think is quite important for our viewers at home, is that as soon as you earn an income, you need to register for income tax because it's income related, right?
Exactly.
Whatever amount of income you earn, you need to be registered as an income taxpayer.
In actual fact, as the name suggests, income tax is a certain percentage out of the income that you have earned that belongs to the government.
Correct.
Yeah, for it to render its services to
citizens. And maybe let's perhaps, just before the break, perhaps just unpack a little further on, I mean, you've touched on it, but I think let's just unpack on why governments actually do collect these taxes.
Yeah, government has no any other source of income except taxes. And for the government to render its services, to build schools where our children will go.
Social responsibilities.
It's social responsibilities. That is the only source of income. So, I mean, tax systems have been advanced currently. Things have been automated to ensure that, with the introduction of e-filing in close to 2009-10 in South Africa, it has actually minimized errors that people will commit. From a SARS point of view, also auditing, also long queues at SARS, all those things. I mean, you can do it at the comfort of your time. 12 midnight, you can file your tax return. You can actually liaise with SARS. So those are services that makes compliance cheaper
and possible.
Yeah, possible, exactly.
I see. Well, we need to go for a quick, short ad break. We'll take a quick break, but we'll come back shortly after this. Please do continue engaging with us because we are quite keen on hearing your views and comments. Reach out to us on Facebook and Twitter, and don't forget to use the hashtag SS on SID. That is MM on SID. See you right back shortly. Thank you.
All of these and more on SID Media TV.
Welcome back, and this is Money Matters. If you've just joined us, we are talking all things taxes, and joining me here on studio is Mr. Churchill Masindi, who is a registered tax practitioner, and he's been helping us, unpack a little bit on this topic. Please do continue engaging with us on social media. Share your views and comments on hashtag M on SID, that is MM on SID, and don't forget to tag us at the SID Media. Before the break, we were just talking a little bit on, the reasons why government is actually collecting these taxes,
yes,
and as part of their social responsibility towards all citizens, I say, of that particular country. Are there major differences in the various tax regimes that are applicable in certain countries?
Yes, the principle is the same of paying tax, but the laws will be written differently, and the regimes are a bit different from here and there, especially when you go to at an international tax level. I'll cite about 2 or 3 examples. For instance, in South Africa, our tax system, our tax regime is source-based, source of your income.
Okay.
Yeah, that is 1. 2 will be your residence-based also. So that's how it is done. And for individuals now, individual taxpayers, it's pay as you earn based. So you have got your own tax bracket based on how much you earn.
I see.
I've got my own tax bracket based on how much I earn. So there are different tax brackets that accommodates all 60 million South Africans. But when you go to other tax jurisdictions, you will find that tax is applied at a flat rate. Yeah.
What?
At a flat rate. So everybody pays 30%, irrespective of how much you earn.
No.
Yeah, you see. So there are countries where we are like that, where their taxes are flat rate, and others will be simply terminology difference. For instance, if you go to most African countries, you will find that what the South African VAT Act describes as VAT, value-added tax, is called GST.
Yes.
General sales tax,
yes,
but it's the same. The difference may be the terminology. Number 1, 2 will be the rate at which is applied, which is in South Africa is currently 15%.
Yeah.
In other countries, you find it's 10%. Others is 8%. Yeah,
it might be 20.
20 years. Yeah. So the principle will be the same of taxing goods and services for the value that has been added, but it's called general sales tax.
Yeah.
Yes.
Sheesh, I mean, I was quite shocked and taken aback by countries that are applying a flat rate, and I'm just thinking, what is the gap between the rich and the less privileged? Because, I mean, our tax system is quite progressive, right? Because
yes,
it takes into account the amount of money that you earn, and the wealthier you are, the more taxes presumably you pay. And if you don't have much income, then obviously you don't pay as much tax.
No, that is true. Our tax system has been written in such a way that it's a progressive in nature.
Yeah.
And obviously, from a SARS point of view, also for administration purposes, they also segment high net worth taxpayers. So they are dealt with at a certain level. And obviously, the middle income also sits within a certain bracket. And the rent extra that you earn from me, we may be in the same tax bracket, yourself and myself. But if you have, because a bracket is wide, it can have a variance of about 500,000 rand at some point. But that bandwidth also, if you earn a rent extra, you'll pay rent extra on your income.
Taxes.
Yeah, on your taxes, exactly. So it's fair and equitable in nature that I contribute my fair share to the fiscus of the country of what I'm earning, yes.
Yeah, so we mustn't actually be confused by the fact that I fall within this particular tax bracket and think because we both fall into the same tax bracket that now all of a sudden we're paying the same amount of taxes. It's not that way, because it's designed to take into account the fact that yes, we might fall into the same bracket, but there are different, rates it's the same rate but different rates that apply. I don't know if I'm making sense.
No, you're right. You're true. I mean, I've seen people going to lodge complaints at SARS to say I'm working for this company, I'm in this portfolio with this same person, we earn the same amount, but she got a refund, I did not get one.
I see.
Yeah, I mean, it's a bit of a flawed argument in the sense that there's what we called deductible expenses and non-deductible expenses. So deductible expenses is your medical aid, retirement annuity, donations that you make. But the donations, I'll come back to the donation part. travel allowance. So all those are tax deductible expenses. So you may find that one of my medical dependents went for a major operation on that particular tax year, and I had to fork out money out of my pocket. Those expenses are deductible on my tax submissions, but you are not, and then you cannot expect a refund out of the same, because we are earning the same money and for the same company. So there are many other variables that happen, which you may not know. You know, yeah.
And I think it's maybe just we need to underline that when we're talking income, it's not just salary. It's income from all. So you said it's source based, right? It's
Yes.
all sources, whether
All
it's
sources.
rental income, whether you're freelancing, it's all sources of income that actually form part of your income as defined by SARS.
Yes.
Okay.
Yeah. That is true. It's all income that you have earned. You will find also, I'll give you a typical example of what happens. You'll find somebody working for the Department of Health or Department of Education, where they earn a salary, which is one income. Now, as we have heard from the Minister of Corporate Governance, the elections have just been proclaimed.
Yeah.
The IEC will hire people to come and work for that weekend for those weekends where people will be registering. You earn an income there. You need to declare it. And don't make a mistake and think, I'm just telling viewers at home, don't make a mistake and think that SARS is not aware that IEC paid you. It is aware. Because remember, this money is coming out of their bank account.
Balancing act.
Yeah, it's coming out of their bank account, one. It's coming out of their payroll, which payroll they submit to SARS.
They trace, follow the money.
So it is cross-referenced with what IEC says. IEC says, we have paid Mr. Masinde 5,000 rand for doing work for us on such and such a weekend. And on the other end, SARS says, come and declare under oath by signing or electronic signature by clicking, I agree with the submissions on e-filing under oath. And it says, SARS will actually ask, are you sure that you want to, whatever you've declared is correct? And you say,
yes,
I'm putting my hand on the Bible. It's correct.
Wow, that is true.
And then 2 days later, they send you an email and say, make corrections if you want to make corrections. And the reason why they're saying that is they know that there's somebody who's saying, no, we have paid you.
I see.
Yeah, so once they've given you that, they are doing what we call PAJA, Promotion of Administration and Justice Act.
Yeah.
Yeah, so they're saying correct whatever before we penalize you.
Penalize you.
Yeah, before we take any punitive measures against you, correct whatever you've done. If you don't, then we're coming with
you.
So it's a carrot and stick approach.
I see. Sheesh, we have to, wow. We have to go for a quick short ad break. We'll be right back to continue with this very interesting and quite insightful discussion with Mr. Masinde. But before that, please do share your views or even SARS nightmares with us on Facebook and Twitter. Do not forget to use the hashtag MM on SID and tag us at the SID Media. We'll be back shortly. Welcome back, and this is still the Money Matters show, and we are talking today tax returns, something that is very certain and unavoidable. And before the break, we were just unpacking with Mr. Churchill Masinde on some of the implications of not submitting your taxes or the income that you're earning from the various sources wherever you're earning the income from. And just maybe back to you, Mr. Masinde, right, on the last bit. We were talking about, why do we need to file taxes and the importance of actually filing taxes. But I think what's also important is, can I legally avoid tax in South Africa? And is there a difference between tax avoidance and tax evasion?
Okay. Yes, there is a difference between tax avoidance and tax evasion. Tax avoidance. It's reducing your tax liability using the Income Tax Act or the VAT Act, or that particular act that administers that tax type. So we'll have Customs and Excise Act, we've got the VAT Act, the Pay-as-you-earn Act, Skills Development Levy Act, which is also administered by SARS, Pay-as-you-earn Act. So all those acts, they've got what I can call loopholes that you can legally use to reduce your tax liability. So those are in the law, they're in the statute. Yeah, they've been passed by the National Treasury through Parliament, and they've been promulgated. So that is tax avoidance.
But just for me as an individual,
Yes.
Practically speaking,
Yes.
like when I talk tax avoidance,
Yes.
can you just maybe just give me a practical example that I can relate to?
Okay. One, you may decide to say, I don't have an NGO, I don't have a foundation that I can use as a vehicle to give back to the community. And I don't even have time to go and look after these kids, because it's not just money only. You may need to be there physically.
Yeah.
But I know Churchill Masinde Children's Fund, which I can give 10,000 rand towards the coffers of advancing their main objectives. If I'm a tax-exempt organization, as Churchill Masinde Foundation, I'll give you what is called a Section 18A certificate, which allows you to go and claim that donation that you've made, which reduces your tax liability. So legally, you are reducing your tax liability, and at the same time, achieving your social responsibilities also to the community. So it allows you to donate to the community within a certain framework, and also benefit tax-wise also. Unlike just going to find somebody who's in the street then and give them 10,000 rand to go and do whatever they do.
And claim you can't claim.
You can't
that
claim
one.
because you don't even have. Yeah.
Oh, I see. So
Yes.
so it's differentiating between the sort of the way that I'm spending or contributing towards social development, as
Yes.
an example. So I could essentially say I'm looking. So if, for example, I've got very soft spot for kids or for education, then I can look for an organization that sort of supports that,
Yes.
right, and then donate towards that organization, but make sure that that organization also has a Section 18A certificate, so that I may be able to claim that donation as a deduction.
That's true.
Okay.
Yeah, and then another trademark also as a privileged person will be if you you declare your income, and then SARS says in the historically,
Yeah.
from olden days, you will take all the medical slips, retirement annuity certificates, Section 18 certificates with your tax return, and then give to SARS. Now that has stopped. You declare everything,
Yeah.
and then SARS will then come back to you and say, give us 1, 2, 3 documents, we want to audit you. So, and that is based on, there's a certain threshold of medical expenses. So so SARS systems are designed in such a way that if you say, you declare that I paid 10,000 rand for, as an example, 10,000, I paid 10,000 rand out of my own pocket towards medical expenses. SARS will say, no, we don't audit this 10,000 rand. It's fine, it goes through. But once you put 10,500, it triggers it for audit. And then they will say, no, give us the medical receipts.
So you're actually telling us where to limit the threshold.
But that's if you know what the threshold is. Yes. Yeah. So those are some of legal ways of claiming. But obviously you don't have to be claiming fraudulent stuff.
Exactly. That's
Yes.
what I was about to say.
Yeah,
is
you
that
don't have to be,
just claim what you're supposed to be
You're
claiming,
supposed to be
essentially, whether
claiming,
it's
yes.
above the threshold
or below.
the threshold.
Yeah.
Just do the right thing.
So the test will be, should SARS come back and say, want to audit you, will I be able to produce?
I see.
Yeah, because otherwise you are then opening yourself for fraud charges against SARS.
Just need to be
prosecution,
truthful. Yeah, you just need to be.
penalties and interest. Yes.
So does that then link to my second question of evasion?
Yes.
So evasion is essentially
illegal.
fraudulently.
It's illegal. Yes. In the tax evasion is very wide. It's declaring wrong income.
Yeah.
Or non-declaration at all.
I
Those
see.
are two different things. You can declare, but less income that you
Yeah.
earn. Claiming fraudulent expenses, to say I traveled from here to Durban for a business trip, whereas you never traveled, we never went there. Those are tax evasion schemes that are there, and there are very advanced schemes that are done by multinational companies that come here to South Africa and actually across the world, where they run schemes where they avoid paying taxes in the countries where they're operating, thereby exploiting the resources of that country.
Correct.
Yeah, and take profits to them other countries. Some of them are called transfer pricing.
Yeah.
BEPS also. BEPS is base erosion, profit shifting. So they move their profits here. Remember, you pay taxes on corporate now. It's applied at a flat rate. Corporate tax in South Africa is 28% of your profits. Yeah. So companies will move profits from here to their mother countries, avoiding paying taxes in South Africa.
Hey,
that is evasion.
Yeah. Hey, but we definitely do need a part two, Mr. Masindi. But any final thoughts on or anything, parting shots that you really want to leave our viewers with, just to make sure that we really take our tax returns and tax filings seriously?
One, my first advice would be to business people. No matter how small business you are, get tax advice.
Yeah.
Get tax planning before you commence trading. You may think it's a small tender, I'm supplying food to a school through Department of Education. Tax advice on the implications thereof.
Yeah.
For individuals, it's an annual thing. Every time when you get your RP5s, get a tax consultant who will assist you, especially if you've got other deductible expenses, you've got extra income, consult, and then you can benefit out of that. Sometimes on medical expenses, you may have a child who's disabled.
Yeah.
Yeah, they've got a preference when it comes to claiming of medical expenses, unlike kids who may not need special needs. Yeah.
I know we can go on and on and on and on this topic, but we just have to cut it and break it here. But it was such a pleasure to have you with us in studio and for sharing all those powerful nuggets that you have with us. And I think our viewers at home are now quite clear on what they need to do when it comes to their taxes. Well, that is it from us today. It's been such a pleasure to have you join us for this very interesting conversation. We shall see you back next week, same place, same time, right here on Money Matters. And from me, Joy Maleti, and the rest of the Money Matters team, it is goodbye and God bless.